The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Trade what you see. My pleasure to be here. My service is the opening call and my show is at noon. I'll be doing that again today at noon, called the Tiger Technicians Hour. Okay, I wish you all a very Merry Christmas, those celebrating, and certainly let's look at 2021 as a refreshing year. We've had a year of, let's call it a transition year, and we'll hope that 2021 has a brighter and sunnier future. Looking at the Dow, the S&P up 475. This is the March contract, March 21, trading at 36.86. Now this is interesting. I've got in the daily chart of the SPY, the S&P, and the futures. I've got a sell signal in place. It can be taken out as if there's a new high, a new recovery high. That just eliminates it immediately. But if you look at the technicals on the left side chart, that's the daily. In the middle is the weekly. On the right, it's a 120-minute chart. Let me just show you what we're looking at here. I've got an expression that says a rectangle formation can last a lot longer than your patience. I drew this in yesterday. Where were we yesterday? Somewhere over here. When I was doing, just before I did Larry's show, and I showed my subscribers to my opening call, I said there should be an H pattern going to, or I typed it in, an H to an M pattern. What does that mean? The Chapman wave methodology is very simple. We try to identify the lowest low bar, count each successively higher peak, alphabetize them sequentially all the way from an A to a G, 7 higher peaks. But it's at that fourth peak, the peak D, that other things can happen. That's number one. Number two is I'm only looking at 3 patterns: straight up, straight down, cup formation, arch formation, and a combo. And here the combo says it's red because if you take out a sharp move down, an arch formation, usually peak A or peak B minus, fails, takes out the left side low, you can go a lot lower. And on the right, you've got the opposite. You've got the inverted Y or the reverse Y. And that says you take out that left side high, you can go quite a bit higher. So I just keep it as simple as possible. There is a certain point where it gets a little more complex. But in the meantime, what we've got here is a peak D. Remember that fourth highest peak is where other things can happen at 36.24 round number high. Slumps on Monday overnight into the early morning to 35.86 round number low. Shoots up to about the 37.01-ish area. Starts a peak B, goes to a C, arch. Second arch makes the 36.51, really important support, pops up to the high today of 30, I think it was 36.94 something, 36.94.50, and now you're trading at 36.85 going in. And in fact, what I like to do, because all I'm about are patterns that repeat over and over and over again, is I like to make it even smaller. And I'll say near term, you've got the parameters of 36.78. A close below that intraday would be very negative, and you're looking at the upside. I would put that at 36.91 or 92. All right, those are parameters short term. That's the 120-minute chart of the E-mini. If you're looking at the monthly chart, this is only a leg B. This should still be in the Chapman wave. Remember, the buy signal goes to a buy mode in the Chapman wave, and you expect then, once those technical considerations are in place, you expect at least 4 higher peaks, a peak D, and you can go higher, but D is where you lift your foot off the accelerator, hover over the brake to see what happens over the next few bars, because you could recycle up a whole bunch of things. So what we're looking at in this particular instance is that that leg B says that in 2021, we should be going to another higher peak C and a higher peak D. Doesn't tell you when. There are other techniques that do that. So in the meantime, I'm just going to do this for the S&P E-mini. I'm going to outline this and say, okay, for the daily chart as well. Those are the borders. And then there's a very key level. We've actually passed the time ideal time. It could still happen. If there is a trade to this wick, the long wick of Monday, if we get into that wick and start to trade for 1.5 hours intraday, and that's around about 36.49, let's call it 36.50. Trade underneath that for more than 90 minutes, there's a real good chance that we're on our way to the 35.86 low. On the other side of the coin, if there's a trade above 37.03, that's very positive. It could retest the high of 37.24. Where are we? You can see we're stuck in the middle. We're just in the middle. And this is a time, quiet time in the market based on the Christmas holiday. Also a quiet time coming up to New Year, shortened week this week, shortened week next week. We'll see what happens. So let's go to the YM, which is the Dow futures. Here you've had a peak G in the futures, but I'd like just for the moment, and we're up 41 in the futures. But let's go to the Dow cash. I spoke about this. I've been speaking about this for weeks and weeks. This technique that I use, the Chapman Wave Inside Track Repellent Zone. You see the slightly rising channel green to the upside, because if there's a piercing of this, let me just close it once there. If there's a decisive push into the 30,000, at this point is rising, so I have to go to a little bit higher level. If there's a close above 30,630 at any point in the next 2 weeks, that's going to be very positive because you've raised the base of support. But in the meantime, look at the repellent line. I spoke about this yesterday, and we went almost to the door. We went right there. The high yesterday was 30,292. It just needed to go about another 8 points. It would have hit that pink repellent line. Look how many times it's been there. So this is saying there's either distribution, because since the 9th of November, we're only about 200 points away from that high. It's just been a steady roll to the right side with slightly higher highs, slightly higher lows. And then on Monday, we dropped down to 29,755. MACD's weak stochastic is now under 80% to 70%. The blue line is the on-balance volume. You're underneath, or you're testing this pink support line. This is really an important phase. But because we've gone sideways for so long, remember, a rectangle formation can last a lot longer than your patience. So this is a slightly rising rectangle. So let's just say it'll take a decisive close below 29,700 to say, aha, now we can have a deeper and longer pullback. So those are the parameters to watch for. Let me just show you a couple of other things here. We've got the S&P. I showed you the futures, but the S&P itself, peak D, there it is, 37.2670 4 days ago. And now we're looking at holding above the green 9-period exponential moving average. If it breaks the 36.80 14-period moving average on a closing basis, it says, watch out, there's that candle wick we're going to be watching. And the weekly charts in all instances are still very strong. Look at the IWM, the Russell 2000. IWM is the trading vehicle for the Index 100, and it's up 79 cents pre-market at 199.73. And what we are looking at, this breakout is either a leg F, or I have to say that this is a potential Chapman Wave instant restart. I'm going to circle it because it's always something that you need to keep in mind. And that says, if there is, all the way into Tuesday or Wednesday next week, if there is a push into the 203 area, that's very positive. So be watching that. I'll be back in a moment. There's a lot to talk about. I want to look at the grains. I want to look at different futures. We'll be back. Basil Chapman sitting in Fibonacci Pesavento. We're right back. Dow futures are up 36. The E-minis up.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So a couple of things I wanted to talk about. This is Basil Chapman sitting in for Larry Pesavento and Zip in the Den. Yes, I'll get to FTFT in a moment, but let's just do this. A couple of things that are really important. I've been talking about that when the Fed finally sees inflation, it could come really quickly. And that's the reason why we're always looking at gold, but that's the reason why we're also looking at the commodities. Look at wheat. Wheat has had an absolutely fabulous move. What happened here? There it is. So wheat trading right now up half a point. Look at this monthly chart. The wheat continues. Beautiful cup formation. You remember we spoke about the cup formation? Beautiful cup formation. It made a peak C. It looks like it wants to go to a leg D above 644.5. That was the high of October of this year. And if it does that, then all of a sudden that high bar of the August of 2018 at 664 becomes the target. It's at 630 right now, 630 and a quarter. That's wheat. Look at this is a Chapman Wave Insight. Oh, I haven't shown you that. Let me just show you this for a moment here. There's a technique that I use when the price goes to a certain point and then pulls back, starts to make lower highs and much lower lows. Then at a moment, it suddenly finds support and it turns around. It can make either the cup or the V-shaped pattern. And then all of a sudden, if it breaks that trend line, it can go one-to-one to the upside. Hey, how does that work in live practice? Well, here it is. We're breaking out right now this week in leg B daily leg. It's called the gray leg A at this particular point. The moment it goes above that C, it picks up the old nomenclature, and that becomes new leg D. As soon as it goes to 644 3/4, it becomes leg D, and that's what it should do. And then you can have a one-to-one expansion to the upside in the same number of bars, with 3 bars, and could go to the 648 or 652 area. We'll see what happens there, but it needs to close above this trend line for a good couple of bars. Okay, and the next thing is soybeans. Soybean up 9 at 1267 3/4. Leg C in the daily. Isn't it a spectacular move? Look at this. It goes peak ABCD in the weekly chart, pulls back. Alternate count E/A, F/G, G/C, and then it goes to that requisite D. It's in leg D in the weekly. And this is the monthly chart, soybeans continuous contract. I mean, talk about inflation. Is this not inflation? You're going in wheat, soybeans. I'll show you corn in a moment. Going up, in this case, it's almost a 50% gain from the 800 area, 808 to 1267. I mean, that's incredible. In one single leg, 8 to the upside, above all those resistance points. The next resistance is the one from January of 2017 at 1282. Remember, these are continuous contracts. When people trade, they trade the current month, or they look at all the different months. This is just the continuous contract. Gets smoothed out, so the price might change, but the pattern and the nomenclature never changes. Here's another one. Look at this. Corn, as we say here in the Boston area. I'm from Newton, Mass. This is where this is being coming. The broadcast is coming from the Garden City in Massachusetts. Well, that's what it's called. I'm sure there are plenty of others. Leg A in the weekly chart in corn, it's up. No, it's unchanged today at 447.25. Leg C, it should go to a leg D. See, when it has parallel highs, it 449.75, 449.75. That's still leg C. If there was an eighth below it, it would be peak C, and the day's young. We don't know what's going to happen. So this stays C until it makes a peak with a lower high bar, and then goes to leg D. So, and look, right on the 200-period moving average, you can expect corn to start having some kind of resistance here. Let's look at gold. Gold is down 4 at 1873. Acting quite well. There's that cup formation. Remember those? It's really important to keep note of these cup formations. And look, here's a fighting cup formation with the channel, down channel resistance. Hasn't been able to break the Chapman wave inside track repellent zone. That monthly chart made a peak E. I've got this drawn, and it says if there is a close below 1780 at any point in the next 3 weeks, be careful, because gold could go below the 14-period moving average in the monthly, which is at 778. I've just put that in as a potential. What really is happening is it's walking the 14-period moving average, and it's way above the green 9-period moving average, and that's good. So gold is consolidating, and it's at an inflection point, because if it can get to 1928, 1932 and close there on a weekly basis, then it's possibly forming the cup formation. That would be very positive. And that also starts leg D if it goes one tick above 1912.0. That starts leg D. Look at silver. Silver's got a way better pattern, but it's a little weaker today, down 33 cents at 25.59. And we're looking at leg C in the weekly chart. This is a leg A, but look how beautifully it's held the 9-period, not the 14, but the 9-period exponential moving average. Folks, if you want to learn more about this, you can listen to my show at noon. I'll be going through a lot more. And my service, the opening call, I go through this for subscribers. We have, in fact, I show this every day, the different patterns, and any particular stocks that we have. I show it in great detail, the waveform, what the count is. I had a question about could I go to the dollar and then go to Bitcoin. This is go to Bitcoin right now. Bitcoin, I want to see, is down 170 at 23,575. There's that peak D. It says be a little careful here, but the MACD is strong. Stochastic is really good at 85%. On balance volume, the blue line is good daily. The weekly chart has gone to an F/C alternate count. It's gone above the 238% expansion in the fib, and so that's just above it, but it's underneath it with the doji candle. We'll see how it closes today. I've always watched doji candles with you got to watch them carefully, but it's only a leg C in the monthly chart. So just to tell you, for disclosure purposes, we are long the Bitcoin futures. That is the Bitcoin fund. We got in at the 1241 area in the 1240s, and it hit 32. That's just in the middle of, what was it? We got in October, October the 14th. So that's October to November, December. So just over 2.5 months. That's like a 2-year gain. That it happened in just over 2 months. I mean, it's unbelievable. I think it's going to be consolidating a little bit here. Thank you very much, GT, for your information on that Bitcoin. What was it again? Let me just say, Riot. That whole thing is really interesting. I'll get a chance to read it as soon as I'm done with Larry's show. Now you want to look at the dollar. Yep, the dollar's struggling. The dollar is down 7 ticks at 90.25. And what's really important about it, you've spent 5 days holding above 89.73, the low that was made after that 102.99 recovery high at peak E in the monthly chart. Here's the pattern I'm looking at, declining wedge formation. It has to, over the next 6 weeks without, we can make another low, but without breaking 88. It has to start a push to really show that it's got some kind of more than a short-term balance. The dollar needs to get to the 92, 96, 93.50 area and hold there for 2 out of 3 weeks, preferably going to the 93.50, 94.20 level in one big swoop and then holding steady. That's what the dollar needs. We'll see. We'll be back in a moment for the opening of the market. And the question, I haven't done natural gas as we're going out. Natural gas has made a peak C. I'll talk about it. Very important.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. My honor to be here. And look at this. This is the 10-minute E-mini after that big swoosh to the downside after the 4 o'clock close yesterday. It hit 36.75-ish or 4-ish. And then it ran up peak A, peak B, peak C, peak D, pulls back, hits the 200 period. You see, Larry doesn't use any of these techniques. He has his own technique. And I always say, whatever technique you use, if it's consistent and it's profitable, don't listen to anybody else. Just do it. And if you want to listen to somebody else to garner some information, let that become your technique, not theirs. So you get to understand it in such a way that it becomes part of your own technique. After all, there's no way that person could ever be part of your technique because you're the one, you own it, you have it. You have all the consistencies and inconsistencies. So if you add something, try to turn it into your own. So what I'm looking at here is you get to a second peak D. There's a beautiful arching formation right here, just a very gentle arch. It's come back down, but it's held. It hasn't gone down to the low. It's holding this 200 period exponential moving average, this pink line right here. It's like a magnet. It's a resistance, then it's support, magnet. You can go above, you can go below, but you are stuck on that. And until this breaks away, and the E-mini up 675 can push into the 689, 691 area to say, hey, I now want to target the upside in the 3694s. It's kind of stuck. It can do that, but right now it looks kind of stuck. Dow is up 63. S&P cash is up 7. Here's another little thing that's also very interesting. Look at this. Remember my expression, remember I spoke about it yesterday? Here's the 5-minute chart. Let's see what we've got here. The 5-minute chart, because I'm not trading right now. So peak E, D went to E, at least a D, but it can go to an E, and went to an E, came all the way back, made an arch formation, second arch formation, held that support. Look, a beautiful support. Now it's trying to rally. It's up 675, hitting the 200 period moving average of what? Of the 5-minute chart. Do you need it? Did you need it up here when you had 3694? No, you didn't even care. Once you broke these 9 and 14 period moving averages, yes, you absolutely needed it because that was a target and it becomes a support level. Let me show you something else here. I wonder if I've still got it because I haven't been doing anything with it since I've been getting ready for the show. Yeah, the Chapman wave methodology says that a rectangle formation can last a lot longer than your patience. Yes, you can pop above if it's a high-level consolidation, but there's a chance that you will break down and go below and then come back in again because the price says, oh, I didn't get a chance to say goodbye to my friends. So what are we doing here? We're looking at peak D in the 1-minute chart, pulls back, holds steady, long. We're talking about from 7:58 this morning and then until 9:10. Look how many 1-minute charts it is. It holds steady, breaks to the bottom, and then it always says, hey, wait a minute, I forgot to say goodbye to my friends. It pops up, and that's the test. Can it break above? It's trying right now. It is at 36.88, up $7. We'll see. This will be a brand new, is that a low and a low? Yeah, this is a brand new A. That's a new brand new leg B in the 1-minute chart. Whew, did a lot there. So the couple of questions came in. Let me just do this. FT. Question about it. Is trading at $1.93, down 34 cents. And what I said is, let's see, a question came in from, was it, who asked me the question? I think it was Zip. Yeah, Zip asked me the question. So what I said was, FT has these sudden huge upward single legs and then collapses. Either you nibble here and then wait for a punch into the 22.38 plus area, then dive in for a potential acceleration. That means you add to it, or just start a small long and then wait and wait and wait. Either for $1.60 or lower, or the big spike. So if you're getting in right now, you got the 1.98. What is this? Let me just check. 1.89 is the 200 period moving average support. It's trying to head towards the bottom. To tell you the truth, I would much rather play the upside than to try to catch a falling knife to the downside. So if you ask my opinion is hold off, don't do anything. Yeah, for 190, even if it goes to 180, 88, and then rallies. So you've missed a few percentage points on the downside. I don't want to be buying the decline. I want to be buying the rally mode. If you want to go long, then you have to wait for the rally mode. So either you just nibble here, but you got to know you've got a risk of even 15%. It's a big percentage when you're talking about $1.39, or 93, sorry, stock. But if you want to just nibble here, that's your nibble. You'll start to really get in if it shows 3 days, 2 to 3 days of higher highs and higher lows. Okay, I hope that helps you. Next question I had was natural gas. Natural gas trading right now up 7.007, 008, going once, going twice, 2.595. It made a peak C, and then this pullback is a little deeper than I would have wanted to see if it held the 14-period moving average at the 265 area, and it had a little bit of a 2-penny bounce. I'd say, it looks like it's going for a leg C. This, to me, after such a deep decline, is saying it's really struggling. So what I normally would do is I draw in the arch formation. Remember, that's what we always do. Draw the arch formation. The MACD is strong. It's going, that goes to there. So this is what we want here. So you draw the arch. I have to also draw the right side. Now, you remember the technique that I use called the Chapman falling axe pattern, the one that I discussed a moment ago, this one here? Well, the same thing applies upside down. So there are always two fighting patterns. One is the upside, one is for the downside. But look at this. From that level, I go like that. And from this level, I go like that. And now you've got inverted falling axe formation. And that says if natural gas starts to trade under this trend line, it goes to 2.48 on the continuous contract. Be careful, because you start to fail in the arch formation. If by today or Sunday night, Monday, there's just a nice bounce that takes it above 2.68, it says it's in play. The MACD is good. Stochastic's still improving at 67. It's not great. I prefer over 80%. On balance, the volume's good. The relative strength, the little blue line there says, it's kind of struggling. And the weekly chart technicals are still really quite poor. So this is a disappointment from yesterday's red candle, big red candle, to today's lower low. But it is holding support, and it is holding a little bit better than, I would have thought, seeing it going down to the 2.51 area. So if you are long and you've been long and you're holding, I'm just going to say to you, that's fine. There's no problem with that. But what I am going to say to you is, within the context of the pattern, see how it went peak A and then failed. This has gone at least to a C. You need the proof of the pudding is in the price. Remember, price is the arbiter of a trend, not the technicals. The trend is the price. If it goes high, it's going higher. If it goes low, it's going lower. So what I'm saying is I want to see it over the 14 and 9-period moving averages. I'd like to see it close above 2.66. And at this particular point, if you're long, I'd put in a fairly tight stop. You can always get back in. So just be careful. It should be going up. This is the winter time, right? So if you're looking longer term, I would say 2.49, 2.47. That's kind of key. If it breaks that on the downside, that's not good. So in the meantime, if you're holding, keep holding. Raise your stop if it goes higher on at least part of your position. I'll be back in a moment. Guys at 33 seconds up.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
I just got this email. Hi, Basil. I sent you an article a couple of years ago regarding skyscrapers predicting market tops with construction of a new tallest building in the world, signaling caution. It was you who drew my attention to this point in your show over the years. You may find this article interesting. I haven't had a chance to. I just got this. So it says, skyscraper curse and how Austrian economists predicted every major economic crisis last, whatever. Okay, Terry. Thank you, Terry. I appreciate that, Terry from the United Kingdom. Yes, I am going to be getting back into all of that because I've been discussing about 4 or 5 months ago. I said, I'm not sure how the next phase of my CODA phase, where we're going to a major market up move, where the public, general public, just can't get enough of stocks. We're going to be watching the IAI. The IAI, that's the broker ETF, broker-dealer ETF, which some subscribers bought the day after the low on the 23rd of March. They bought it on the 24th at 24. It's at an all-time high right here at 79. This, to me, I've been talking about it for a long time, and I said this is going to be the indicator that tells me that the millennials who everyone said are just not interested in automobiles and not interested in stocks. They're interested in everything else. I said, just wait a minute. They'll be interested in stocks. They'll be interested in jazz. They'll be interested in automobiles. Maybe it'll be electric automobiles, but they will get interested. Just give it time. And we're going to that phase. And now I couldn't even tell you how many articles in the last 5 days alone have been predicting a major market move up, and the jazz age and all that. This is stuff I've been talking about for, I don't know, some of you know that's how I got into that way early. I've been talking about this for decades, actually, that eventually capitalism is going to take every dollar via the stock market, and we will go into this period where socialism will be talked about and discussed and become very much part of the vernacular. Because of the failure, and that capitalism is an incredible instrument. The only problem is there are no governors. You know, a governor is on a car. A car can do 150, but they govern it so that it can only do 120, or it can do 120, and they make sure that it has a cap on it. That's a governor. The whole thing about market crazes is that there is no governor to capitalism. Capitalism then becomes greed. On the way up, you've got innovation, you've got all these incredible things, but then there's a point where it just becomes gluttonous, and that it involves, you remember in 2000, for those of you who were around, you remember the grandmothers who were supposed to be buying bonds not only skipped 3 stages. Instead of going out of bonds and going into preferred stocks or the most conventional stocks, they went straight from bonds to AOL, to Qualcomm. it gets so exciting. You feel like an idiot when the market is going up 150 points a day, an hour, a minute, and you are sitting there in cash. And eventually everyone gets into the market. Just about everybody getting out is almost impossible. You have to get out early and just watch it from a side if you really want to do it. Or you get you're like, instead of the people that are making a fortune by doubling up and doubling up and doubling up, you're lightening up and lightening up. So when the top actually comes, you have cash and you have everything set aside. And you say, well, I missed a huge big move, but we'll watch what happens when it comes down. But you don't know when that's going to happen. So, yes, I agree with everything that's going on, and even under the circumstances. So what I wanted to say is that there are no governors to capitalism, unfortunately. The only governor is excessivity. It's a term I phrase that I used when I wrote an article with a partner of mine way back in the 1980s for Barron's. We were asked to write this article. It was my article, really. He added the stocks. I did the whole thing on the mega. Actually, there's a book that was out. It's called, if I can find it, The Psychology of Investing by Harvard Medical's, the branch of the medical faculty. I was a guest artist for quite a number of years. Guest artist. I wasn't an artist because I was a musician at the time. I was a guest speaker. And, Abby Cohen, all these people were there. Who did the newsletter based on all the newsletters that were out, the buy and sell based on those anyway, and Marty Zweig, all those guys. So and I had this thing, and it was it's the 13th chapter, I think, of Psychology of Investing. It's called The Mega Bull Market Still to Come. This was in I wrote the article in 1986, 7, and then I sent it to Barron's, but Barron's didn't publish it. Kate Welling was the person that asked us to do this. She was the editor, but Barron's didn't publish it because it was just way too bullish. So that's when I spoke about skyscrapers, and I went back, Empire State Building. You even look at the pyramids, major top. Look at the churches in England, around Europe, around England. The biggest buildings were built, and then there was a big decline. Anyway, so yeah, there's plenty of time to talk about that. Don't worry about it. But yes, I'm aware of it, and I'm looking at all these articles that came. Oh, even Financial Sense, I'll be a speaker there in a couple of weeks. Financial Sense had an article by some guy who said mega bull market. He didn't say mega bull market, he said major bull market still to come. Yeah, absolutely. But first, we're going to have a pretty decent decline. That's coming, but we have to wait. All right. So that's IAI. How did I get into the IAA? Okay, a couple of questions have come in. What about Z? Not Z in the den, our wonderful Denner, but Z, the stock. This is Zillow. So Zillow Group, online real estate purveyor, they do everything that you want. It has a trend line in the weekly at a leg E. I call this a leg F in the monthly. It could be a brand new A, but just for the moment, I'm calling it an F. But leg E, peak E in the daily. There's going to be a clue. Why? Because if you're looking at TLT, and if I'm correct that the inflation is going to come, we will see a breakout. I've been speaking about for 30 years about the Japanization of American bond yields. I think we're at the point now, an inflection point, where there is a chance that we could start to see yields break out. Look at the TNX. TNX.X. Look at this. TNX right here in the 9.3 area. You start to see it get into the middle of the wick of this candle right here. That's the wick of March the 20th, where the high of the 10-year TNX was 12.66 and the low was 7.03. If there is a move into 11.30, I think we're going to break that high. And that'll be a little bit of a shake-up for the market. We've got a mega bull market in yields. And I think as they go down, mega bull market, in bonds, mega unbull market in yields, and that's going to be the breakout. And we have started a leg B in the monthly chart. So we'll be watching that. Wow, is that the break already? how time flies when you're having fun. I didn't even get into half of what I wanted to talk about. I spoke about that. Did I do the dollar? Yes, I spoke about the dollar. I've done most of what I wanted. Natural gas, we did. Oh, crude oil, I didn't do crude oil. Crude oil, as we go to the break, crude oil is down 34 cents. Be careful. I'm watching this. It's almost like it looks like the S&P. So we're watching parameters under 45.5. It goes lower, over 50.10, and goes.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Question I had in the den, could I look at Ruby? Ruby is, let me see what they say. Rubius Therapeutics. Yeah, therapeutics, so it's biotech. It had a move down to the 430-ish area, 2030 area back in November 1st, and then it ran up ABC. Oh, I missed that. AB. Oh, I knew I did that too quickly. That was AB. C's right here. Here's D. I thought it was an instant restart. Yeah, then it had an instant restart right there. E. All right. F, G/B. So yeah, so this is still, and then it spiked, had a one-day spike from 644 to 13.70 on the 14th of December, and then plunged, but held 14 and 9-period moving averages. This looks very good at 8.30, up 30 cents. Now, I have a rule of thumb, and it's only a rule of thumb. It could be any finger, but I'm using the thumb for now. And that says, so often we've seen, I don't know how many times, we even saw it once last year. Earlier this year, there was a spike, and like an aberration, a spike in the price that was way out, and then the price came all the way back. Those aberrations sometimes actually point to where it's going. Now, can it go from $8 all the way back to $14? I don't know. But yes, I agree. It looks good. It's acting strong. I would say above 860, 9010, 9.10 would be the next target, and it has key support in the 772 area. So I hope that helps you. Just a couple of things that I wanted to do. I wanted to wish everyone a Merry Christmas. I'll be back at noon for my show, noon to 12. Then the market's closed for the week, and next week we also have a shortened week. So what am I looking at? Let me just do this, because in my opening call, for those of you who don't know my work, we've been long since March the 23rd via options, and then very soon after that, we bought the Dow Diamonds, got huge gains in the options, the call options, because we kept rotating, moving them out a month at a time. So there were 300, 400, and even 600% gains. But we've got the diamonds, they're up about 42%. At this particular point, and we've taken a little bit of profit, but I am holding those. We did go short the SPY. We've got a fairly tight stop. That's only short. We have about 8 or 9 positions, all of them profitable, some of them up 140%, some 40%, some 50%, being good. So check out my opening call, and if you like my work, stay tuned, because at noon we'll do it again. And have a wonderful weekend. See you on Monday, and I'll be back. Stay tuned for Tom and Tommy coming up for the Bull Bear Show.